Ever heard of a small cap stock quietly throwing off big dividends? Welcome to Insightful Value, where we spotlight overlooked companies hiding in plain sight. Today we're diving into Titanium Oyj, a Finnish financial firm whose stock price is down, but the fundamentals tell a different story. This review is for informational and educational purposes only, not financial advice. Titanium Oyj is a Finland-based investment management company focused primarily on real estate funds, insurance-linked products, and wealth management. It's not a flashy tech unicorn. This is a dividend-focused, yield-driven, cash-generating business operating in a niche but steady corner of the Nordic market. So why is the stock price down? Since 2023, shares of Titanium have declined significantly, mainly due to higher interest rates putting pressure on real estate fund valuations and broader risk-off sentiment in small-cap European financials. But behind the noise, the core business is still running profitably. The company recently reported over $20 million in annual revenue with strong EBITDA margins, around 40%, which is impressive for a boutique financial firm. Net income has remained solid, and most importantly for investors, the dividend yield currently sits north of 8%, depending on entry price. That's not a typo. Titanium is one of the few small-cap European stocks consistently rewarding shareholders with high yields backed by real earnings. Their flagship product is the Titanium Housing Fund, focused on Finnish senior housing, a demographic-backed, demand-stable segment. They also run other alternative investment products that bring in predictable management fees. But let's talk risk. A lot of Titanium's revenue is tied to assets under management, so falling asset values or investor redemptions can squeeze the top line. They also operate in a highly regulated space and don't have much international diversification. If the Finnish housing market weakens or interest rates remain elevated, that could drag on earnings. On the flip side, this is a lean company with low overhead, high return on equity, and no major debt on the books. It's also founder-led, and that often aligns long-term incentives with shareholder value. Why invest now? Valuation is the key. The stock is trading at a very low earnings multiple, with a hefty dividend that looks sustainable in the current earnings environment. If the market stabilizes or interest rates start easing, Titanium could re-rate significantly. But it's not for everyone. The stock is illiquid, microcap, and vulnerable to sentiment swings. You need to be comfortable with volatility and do your own due diligence. At Insightful Value, we dig into companies like this, small, ignored, yet surprisingly strong under the surface. Our goal is to help you see the signal, not just the noise. We break down complex data into something useful and, yeah, a bit more human. For more breakdowns like this one, check out InsightfulValue.com. We've got deep dives, real numbers, and smart insights. No fluff. Don't forget to subscribe to this channel and head over to InsightfulValue.com to explore more overlooked investment ideas worth knowing.